Welcome to the First Responders Wealth Network. Our mission is to help all first responders change their mindset towards money and educate how to build long-term wealth through real estate investing. Are you ready?
All right, guys, welcome back to another podcast. I got Omar here. He's the stock option man and doing a lot of great things and a lot of great education. And actually, I saw you guys talk a couple years ago at a conference that I was at, and I've just heard since then many people who have kind of taken your course and kind of followed through with it who've done really well. So it's great to hear people's success stories as well. So Omar, man, why don't you introduce yourself and then we'll get rolling.
Yeah, absolutely. I want to give a little background about myself. My name is Omar Khan. I spent 15 years working in the financial service industry. I came from finance background, but I didn't grow up very wealthy. And bottom line is pretty simple. Didn't grow up wealthy. I didn't want that for my future. So I figured out a way to make a lot of money for myself along the way, both through real estate and stocks. The stock component now is what we share with everyone. So I had been teaching people to trade for many, many years. I've been trading for 23 years. And me and my buddy, Matthew, we would just teach people to trade because we enjoyed it. And it made such a positive impact on our lives. And then about a year and a half ago, that's when you heard about us.
Yep.
We decided so since so many people are asking us how to trade, like it would be one after the other, and it was consuming up a lot of our time. So we're like, why don't we try this as a business and see how it goes? We had no clue what would happen. Whether it would be successful or a flop, we didn't know. But our mission from the beginning was to provide financial literacy. And here we are, 17 months later, 18 months later, and we've taught over 1,000 people. We have 1,000 people plus in our community, and it's literally growing every single day. So it's been the most fulfilling experience professionally in my life.
Yeah, it's pretty interesting. I mean, even just before we started recording here, we were talking off air, and you're just talking about the different other first responders that are actually doing this on the side. And a couple of people you mentioned I actually know, like Chad. Yeah. And I think a lot of people have this like preconceived notion of what trading is. And as soon as you talk about trading or day trading or stocks, they're like, and they just kind of like push it off to the side, which to be honest was me. Yeah. I'm warming up to the idea. So, just listening to you talk and other people who are succeeding at it, but being very strict in what you do. It's not like you're just throwing shit at the wall and seeing what sticks. Like you guys have a very specific strategy. So can you just kind of maybe, like a lot of people who are listening maybe don't even understand what stock options is like I didn't. So can you just kind of dumb it down and just explain what it is?
Yeah, absolutely. So there's a world of the stock market, okay? And I'm going to dumb it down a lot. So please don't feel insulted by any way if anyone thinks this is too basic. The stock market is basically a collection of businesses, right, that trade. So, you have Apple and you have Facebook and you have TD Bank, and these are all trade on the stock market. And us as retail investors, we can own a little slice of that business of that company by purchasing shares. So that's the stock market. Now, the traditional way of doing it is that you buy low and sell high, correct? You buy shares low, and the idea is to sell them later at a profit and therefore make a couple bucks along the way. Well, what we do instead of taking that approach, what we do is we simply agree to buy stocks we want to buy, right? So, for example, if Facebook today is currently trading at $260, which it is, okay? And I say to myself, you know what? 260s, I love Facebook at 260. But guess what? I love it a lot more at 250. So I can agree to buy it for 250, which is a $10 discount. And imagine somebody pays me like $8 or $10 just for agreeing to buy it for a $10 discount. Sweet deal, no?
For sure.
Right? Because I want to buy the thing anyways, right? And my worst case scenario is that I buy Facebook, but I got a big discount and someone paid me a lot of money just for agreeing to buy at a discount. So what we do day in, day out here at Theta is we agree to buy high quality companies that we want to own, and this is not meant to be stock recommendation. It's just companies that we focus on owning, like Apple, Facebook, Microsoft, Visa, TD Bank, Nike, Starbucks, that type of stuff, right? And we always make it so our worst case scenario is that we wind up owning one or more of those companies, which again, we have no problem doing. We wanted to do it anyways, right?
Okay. So you're actually, and I know a little bit more already, probably more than most who aren't familiar, but you guys focus on a specific number of companies, right? Like it's not like you got a large list of things and it's difficult to kind of manage and keep up with. So talk about that.
Yeah, we only trade 10 to 15 companies because, again, the concept when you're investing in the stock market is you're buying into a business, okay? For someone to logically understand business models of 40, 50, 60 different businesses is very difficult. So we focus on 10 to 15 of the most high quality names, and we get to know them thoroughly, and I mean inside out. When their earnings dates are, what their management team is like, how much cash they have, what their earnings are like, new products, et cetera, et cetera. So when you are investing in these companies, because you've already done your homework, you have a high degree of confidence, right? So if that stock happens to take a dip, you don't view it as a fear event. You view it as an opportunity because you've already done your homework on the stock. So that's how we approach it, right? We only agree to buy stocks that we would buy anyways, and that too at a significant discount. We get paid a lot of money for it. And so it works out quite well. Yeah.
So I think people can relate that to, when you're investing in real estate, obviously you've done a lot of that as well. Maybe you can touch on that later, but it's just understanding your market. So I think that's a perfect example of focusing on what it is best and then kind of trading around that.
Yeah. I'll give you the example of real estate, okay? How real estate works versus options, stocks and options, okay? The novice real estate investor will drive by some property, some new construction. They'll say, oh, I'm going to buy this. They won't look at cash flow. They won't look at LTV required to cash flow. They'll just say, oh, I'll buy this because it's going to go up for sure, right? That is the worst way to invest, right? So that's the real estate version. Now, let's say you go to a sophisticated real estate investor. That sophisticated real estate investor looks at an apartment building and says, okay, I got a 5 cap here. I've got some upside on the rents, and I expect maybe rates to come down because I might have some cap rate compression, and these infrastructure projects are going into place, right? So I'm going to buy here. Now that's the difference between a sophisticated real estate investor and a novice real estate investor. Same thing happens on the stock side. When your buddy's telling you to buy some random weed stock, he doesn't know shit about shit. That's the novice investor. And then you have another person saying, hey, look at the business model of this company. It's going to be great. They make tons of money. Here's how we can make a lot of money, and we thoroughly and fundamentally understand this company's business model, and we know where it's headed. That becomes very powerful to make money. Yeah?
Yeah, I gotcha.
So, sorry about the swearing. I wasn't sure if we were allowed to or not, but too much.
No, trust me. We're used to it where we come from.
No, I know. I told you, I was in the military for 4 years, man. I know exactly what the level of swearing is in the Army. So
yeah, no, it's all good. I'm just waiting for one time when you start these podcasts, Apple always asks you, is it explicit or is it clean? And then I always, you're supposed to check off the clean. And then ever since then, it's been downhill, and I just curse all the time. So I haven't had the email yet from Apple, but all right. So I have a question about, so you talk about how you're buying stuff at like a discount. So you use the example of Facebook. So say it's like $260, which it is while we're doing this recording.
Yeah, actually, I'll pull it up while we're doing it, actually. So yeah.
Okay, cool. But you're buying it at a discount, right? And you're getting paid, use the example, like getting paid $8 for that share. Yep. So explain, how do you get $8? Who's giving you that premium? And how does that whole thing work? Because that was what, I had no idea how that worked.
Yeah, good question. So Facebook currently, right now, as we stand, is trading at $257. Okay. So I go to myself and say, you know what? I love the company at $257. I think, in fact, forget $257. I think it's going to be worth $350 in a year from now, and much higher than that in 3 years and 5 years. So we've already done that homework. All right. That's our baseline. Now we say, wow, it's trading at $257. So I love it at $257, but I'm going to agree to buy it for less. So I'm going to go to, let's say, April the 16th, okay, which is 45 days away, all right?
Okay.
And I'm going to agree to buy it for $250, okay? And I'm getting paid about $9 a share, okay? So I'm getting paid, think of that. I'm getting paid $9 on a $260, $250 stock. That's a 4.5% return in 6 weeks. So I'm making 4.5% in 6 weeks simply for agreeing to buy Facebook for a $7 discount. That's it. And my worst case scenario is that I own Facebook, which I wanted to buy anyways, right? Now, the question is, who's paying me this? You're like, what kind of idiot would pay me this much money to agree to buy it, right? That's a very reasonable question, right? You got that question, Dave? Okay.
That's exactly my question.
Okay. All right. So here's the two type of people that do it, okay? One person is like, let's say I own a bunch of Facebook stock, okay? And I say to myself, hey, you know what? I got to get rid of my Facebook stock for $250 because I got to put a down payment on this property that I got to invest in, okay? So I can't afford to get less than $250. Yeah. So if Facebook happens to drop to $220, I still get $250. So what do? I go out and buy insurance. So what that $9 a share is it's insurance. Someone is insuring the price of the stock, though it does not decline any further than that, right? Now, the reason we're happy to act as the de facto insurance company is because we like Facebook at 257. So for us to buy it at 250, we don't care. Imagine an insurance risk where you're happy to take it. So for us, only two things can happen. Either we own the shares or we don't. But either way, we keep that $9 and we're happy. Now, that's the first type of person that's going to do this. The second type of person is the gambler, okay? The speculator. That person is hoping that Facebook tanks in price, okay? And they're willing to say, well, I'm willing to put $9 a share on this, all right? So if Facebook happens to go below 250 plus the $9 that they paid for, which is, they would have to go below 241, then they would make a ton of money. They would make dollar for dollar. So if, let's say Facebook happens to go to 220 or 230 or 215 in the next 6 weeks, then they would be able to turn a smaller amount of money into a larger amount of money. And again, we're really happy to take their money because would you take that bet?
Yeah, well, it sounds pretty good to me in theory.
Yeah. So now the same reason you wonder, why would someone pay $9 a share? I understand the first guy who does it, like that first person, they need the money because they gotta buy a house, they need a down payment. Why would this other type of person do it? Ask yourself, every time you drive by a casino and it's packed and people are losing money left, right, and center at poker tables, more blackjack tables, roulette tables, and you have to ask yourself, what the hell are people doing in the casino when they know that the odds are so heavily tilted against them, they're going to lose, right? That's the same mentality on the options market. These guys are looking for that thrill of turning a small amount of money into a larger amount of money. And they lose often, right? Because the odds are so heavily stacked against them. We're more than happy to take their money because we don't mind owning Facebook at $250. Oh, and you paid me $9 on top of that? Where do I sign up? That's the rationale. But it only works, Dave, if you've done your homework and you know that this is a high quality company that I want to own, that I have no problem owning. If it's just some random stock that your buddy told you about, you have no clue what's going on, that is not a solution. That is not investing, that is gambling. Yeah? Okay.
Okay.
That give you a better understanding as to
it does.
Yeah, okay.
Yeah, to follow up though, on that second person, would that be considered shorting the market?
No, that is a whole different story.
It's a whole different. Okay.
Yeah, shorting the market is we don't short. Shorting the market is think about it this way, okay?
Yeah, not you guys, but I'm saying the person who you're giving the example of, who if it falls below that, okay.
No, that's not shorting the market. That's simply called buying a put. They're buying insurance, right? They're buying a put. We're acting as the insurance company. We're more than happy to insure the value of Facebook for $250 because we don't mind owning it for $250. Short selling is a different concept. Short selling is, let's say a stock goes up from 100 to 500, okay? And I say, wow, it's going to go right back down again to 100. There's no way it's staying up here. So I sell shares at 500 that I don't own with the hopes of buying it back at a lower price, okay? That's short selling. That is not something we do because the problem with that is a stock, if it keeps going up, you're going to get murdered. We always want to keep it. So for us, the worst case scenario is that we own a high quality stock at a discount. That's the worst that'll happen to us. We're okay. We can sleep well at night. Make sense? Got it.
All so the stock world is completely, it's funny. You dive so deep into one thing, which is obviously real estate. And then, you get exposed to something like trading and it's just like, man, it's like drinking from a fire hose, Okay. So how much are people starting off with? Like, how much are people investing in, $257 a share? Like, where are people starting?
I started off with nothing. I clawed myself up from there. And talk about real estate. Last year I had 37 properties. I pared that down since then. So I was able to acquire a very nice real estate portfolio from my proceeds of my trading over the years. Okay. So I started off with zero. I would argue all day long that knowledge is far more valuable than money. Money will always come, but money will only come as a result of knowledge, right? People have it the other way around. They're like, oh, I got money. Well, that's not how it works. The reason you got money is because you have the knowledge. So for me, it's about acquiring the knowledge, and then the money, to me, I know it's going to come. For me, if someone were to take away my money tomorrow, right, I could do this all over again because it's not about money. It's about what's in my head. So what do you start off with? You can start off with as little as $2,000, but the reality is with our strategy, the more money you have, the more you can make. So for us, I have a large account. So does Matthew, and a lot of the people that are in our group, they have, some of them have large accounts, some have smaller accounts. But the more you have, the more you make. Same with real estate. Like if you're saying, hey, I want to enter the real estate market, but I got $2,000, what are you going to say to that guy? You're gonna like, good luck, buddy, right?
Spend on education and get some creative financing awareness.
Right. It's the same thing with the stock market, right? If you only got $2,000, I would say spend it on the education, because that's what you're gonna need. The same thing with real estate. If you only got $2,000, well, good luck trying to get a property, because you're not gonna be able to get one unless you can get some JV partners and you can finagle some stuff around. And it's gonna be tough, though. My point, right? Same thing here, right? Same thing.
Cool.
Fair
so enough? No, I got you. Are a lot of these stocks, again, I'm not familiar with as much stocks as obviously you are, but are these like paying dividends, or is it just like, so if you're holding those stock, are you just waiting for it to go back up for eventually you're going to sell it at another point? Are you investing in certain stocks that actually pay the dividend if you have to buy?
Yeah. A lot of them, it all depends. It all depends, Dave. So if I'm using borrowed money, right? So if I'm using a line of credit against a property, I'll make sure the dividend payments are higher, right? If it's not borrowed money, I won't be as concerned about the dividend payments, right? You understand?
Okay. Yeah, I got you.
Here's an example. Let's say I were to take a HELOC against a property, okay? And I take 100 G's out, okay? Well, I know my cost of borrowing is 2.45 plus half prime, right? So prime plus 50 basis points. So I'm at 2.95%. But since I'm borrowing money to invest, it's tax deductible. And again, this is not a recommendation. Please check with your accountant. For me, it is, okay? So let's say I'm at the 50% tax bracket. Let's say I get half that money back. So I'm borrowing money at 2.95. I get half it back in taxes. So I'm really borrowing money at 1.5. Okay. Mm-hmm. If I were just to agree to buy, let's say, TD Bank stock or Royal Bank or Microsoft, the dividends that I would receive, if shit hit the fan as a worst case scenario, as long as they don't cut their dividends, I would receive more in dividends than my cost to borrow that money. So it's a no-brainer for me. But I'm very careful on borrowed money versus non-borrowed money. Does that make sense?
Yeah, it does. Like, I know Horizon. Do you guys play with them?
That's an ETF company, Horizon Beta Pro ETFs. Yeah. Well, we don't know, but I know them. Yeah.
Okay. Yeah, I just know that, like, certain places haven't cut their dividends in like their history. So
yeah, like Microsoft hasn't, Enbridge hasn't, TD Bank hasn't, even during the worst economic conditions. Yeah, even during COVID, even during the 0809 financial collapse. So yeah, exactly. So if we're going to borrow money, we'll look for companies that have a history of paying their dividends, even through the most adverse economic situations, right? And that is how, you separate borrowed money from non-borrowed money. But the rationale is pretty simple. If I'm borrowing money at an effective cost of 1.5%, if I can't beat 1.5%, then I have to reevaluate everything I'm doing, right? Like I should be able to beat 1.5%. Like if I were to borrow money from TD and just simply own TD stock, I'm going to get paid more in dividends than it cost me to borrow the money from them. So, to me, that's a no-brainer. But that's an individual question. You have to make sure that that risk is appropriate for you, right?
Cool. And you're doing all this from your phone, right? And you're not doing, talk about how often you trade and then and how easy it is that you're able to even do it. Because I think
I trade entirely from my phone, and I'm done in about 30 minutes a day, right? That's it, right? Because there's a lot more important things in life to do besides trade. Think about it like if I agree to buy, let's say, Apple today, right? And I agree to buy it for a month. Well, what do I have to do in the next month? Nothing really. There's more to know than that. But I already know my worst case scenario. I'm going to have to own Apple. Well, okay. So there's no large degree of stress. Like I know that Apple's not going to go bankrupt tomorrow. I'm not overly concerned. I don't need to look at my phone all day long. It's just Apple stock. Yeah, it moves around a bit. Mm-hmm. But I know my worst case scenario. So I'm comfortable with that. So there's not a lot of work involved in terms of time management. It's more getting your knowledge up so that you can get the time compressed down to about 30 minutes a day.
Right. Yeah. And then, so you obviously have an academy or a program that you're obviously educating and teaching people. So are you helping your students and people who are in your community, like you send out information and let them know what you're doing? So could people just follow what you're doing, or is it more of just like an education kind of you go about and do what you think is best?
I hope people are simply not blindly following what we're doing. That's not a good way to invest. We educate people so that they can do this on their own. Okay. We also let them know what we're doing on a daily basis and why we're doing it. Now, the idea is not to copy us. The idea is to understand the rationale so that you can do it on your own. So we fully believe in teaching someone to fish as opposed to giving them fish. Again, why? Because we, like myself and my business partner, Matthew, we grew up financially illiterate and we wanted a better future for ourselves. So we don't believe in just saying, okay, we'll make this trade. That's not, first of all, it's not even legal. Secondly, it's not a great way to learn. Like, you don't want to just tell someone what to do. You want to tell them, why did this happen? Do you understand the rationale? Right? So when something happens against you, like let's say you agree to buy Facebook for 250 and it's at 257 and it goes down to 230. Well, if you don't know what you're doing, you're going to freak out and you're going to panic. Right? Oh my God, Facebook, why is it going to go lower? But when you thoroughly understand what you're doing, you're like, oh, this is not an opportunity for fear. This is a moment for me to be opportunistic. I need to load up on this thing because I know it's worth $300. And just as a hypothetical, I mean, right? That's the difference between understanding something thoroughly and being fed. We don't believe in feeding people. We believe in having them understand. So yeah, we started this company about 18 months ago. And like I said, it was because we had taught so many people to trade that we just kept getting asked one by one by one. And it was consuming like half our week. So we're like, why don't we start a business? And here we are a year and a half later. We got 1,000+ people and it's literally growing every day. It's been great. It's been the most fulfilling experience of my life professionally.
Yeah. I know Darren talks highly of it too. He's getting involved and that's kind of how we connected. But
Darren Cabral?
Yeah.
Yeah.
Yeah, I know there's a lot of people. Like I said, there's some like Chad that you mentioned earlier. He's he's a fire guy. He's crushing it too.
My brother's a cop. My brother's a cop. He's a trader. Like my brother's a cop. He's a Metro Toronto cop. He trades every day. Because if you can squeeze your trading in. It only takes you about 30 minutes a day. And if you're only trading, if you're trading smaller account, it might take you 10, 15 minutes a day. Like it's not a lot of time commitment once you know what you're doing.
Right. Yeah. Nice. So how can people learn more about what it is that you guys are doing?
We have a free 1-hour demonstration that goes over the strategy and what we do. It's 30minutestocktrader.com/Theta Trading. Yeah, so 30minutestocktrader.com/Theta Trading or also thetatradingco.com. But I would encourage people to go to 30-Minute Stock Trader and watch the 1-hour video. We basically explains the strategy in real terms, and we go through a sample trade and how it works. And then you can decide whether it's appropriate for you. It's not appropriate for everyone. You have to make sure you say, yeah, this makes a lot of sense. I'm going to go forward with this. Or you say, hey, you know what? This is not for me. It's not for everyone, but it's certainly for a lot of people.
It's actually a pretty informative video. I watched it and I learned a lot from it. So yeah, definitely check that out. Cool. Well, that's it, man. I appreciate you coming on. There's just a lot of information there. I know we could dive down so many like different paths, but I think that's like as a whole, that's what options trading is. And if you want to learn more, it's not real estate, but definitely can fund your real estate or vice versa. It can support each other, right? So I know you're crushing it in the real estate world, and then you're obviously crushing it here too. But
I'm a stock guy that moved to the real estate world because
was it the opposite?
It was the opposite. I was a stock guy to begin with, and then 2008, 2009 happened, the financial crash, and I realized, well, hey, I got to have some of my assets outside of the stock market. So I started buying real estate. And then I accumulated a very sizable real estate portfolio from my trading activities. And now I'm selling off some of my real estate because the prices are, in my opinion, a little bit nutty.
It is, yeah.
I'm selling some of them off to beef up my trading account. So the cool thing is this, Dave. When you have a thorough understanding of two asset categories, okay, stocks and real estate, you can look at them both objectively and say, where is the opportunity greater? And then you'll know where to throw your money. Right? The problem is if you only understand one asset category, example, real estate, what are you going to do when cap rates are at 3% like they are right now and you have basically no wiggle room?
No
right?
cash flow.
I don't see the upside, in my opinion. Like I just don't see it from here. Can rates go lower? Probably not. Right?
Especially around here. Yeah.
Yes. I invest mostly in Hamilton, right? So I saw buildings going for 3 caps in Hamilton. That's nutty in my opinion. I'm like, this is crazy. Right? Am I going to force my money into that category when I know that numerically, like, it doesn't make sense? That would be stupid, right? Yeah. So this is what I'm saying. It's really good to know two asset categories so you can say, well, okay, the opportunity is greater in this one. When you only understand one asset category, you're leaving yourself open for a lot of risk. And the problem is in the last 20 years or so now, the real estate market has done nothing but gone gangbusters. So everyone thinks they're a genius. Right?
Yes.
What they fail to mention and fail to remember, and they will happen again, is there will be a cycle where real estate will be out of favor. From 1988, for example, to the year 1999 or 2000, real estate was essentially flat in the GTA. Right? So don't think that cannot happen again. It can happen again. It's a matter of time. So to me, a thorough understanding of both asset categories allows one to make much more informed decisions. Yeah.
And that's why I got you on, man.
I appreciate having me on. Thank you.
All right. Well, thanks again. I'll leave that link in the show notes, and definitely check them out. You'll learn a lot, like I said, in that 1 hour video. And, I'm learning a lot, and I'll be learning even more here soon. So
I'm looking forward to teaching you.
Yeah, man. All right, cool. Well, thanks again. And I'll let you know when this pops up.
All right. Sounds good. Take care, Dave. Thanks for having me on, bud.
Yeah, thanks, man. I appreciate that very much.
Thanks for listening. Don't forget to rate and review on iTunes. Also, check out our website at 911wealthnetwork.com or contact Dave directly at 911wealthnetwork.com. Stay safe out there.